So you want to talk about when insurance is required in Florida? Let's get into it. There are only two reasons why you're required to carry insurance in the state of Florida. One is when it's required by law, either city, county, state, or federal. The other is when it's required by contract, whether that be a lease, a mortgage contract, a construction contract, or a service contract. There are a lot of situations where insurance is required by law. To give you one simple example is auto insurance, because that's pretty much required in almost every state in the union. In Florida, you're required to carry personal injury protection and property damage to other people's property. If you're involved in an accident that someone got hurt, you're then required to carry bodily injury coverage for third parties, meaning not yourself, other people, but only in those situations. Otherwise, you're just required to carry that personal injury and property damage coverage. Another example where you may be required to carry insurance by law in the state of Florida is to obtain certain types of licenses. To give an example, general contractors. In the state of Florida, general contractors are required to carry $300,000 of general liability insurance in order to maintain their license. They are by far not the only ones required to have that type of coverage. Many types of contractors, propane dealers, certain types of health caregivers, are all required to carry insurance in order to maintain their licenses. We recommend that you check with your licensing board in order to verify what type of coverage may be needed in order to keep your license active. One more example about where you're required to carry coverage by law that's worth mentioning is workers' compensation. In the state of Florida, you're required to buy workers' compensation coverage if you're in the construction industry with your first employee. That includes the owner, because in the state of Florida, officers are employees of the corporation unless they file for an exemption. We'll do a completely separate video for that. If you're not in a construction-related industry, you're required to carry the coverage after you've had 3 employees. The same rule applies regarding officer exemptions. Owners are included unless they file that exemption. The federal government can also mandate that you have certain types of coverages. A simple example of that is interstate trucking, where they're required to carry coverage in order to be able to transport goods from one state to another. Many counties and cities also require that you have coverage so you can do business within their local jurisdiction. These requirements can be something as simple as an occupational license, also known as a business tax receipt, or to get a permit in order to do business in that municipality or county. An easy example of that here in Miami-Dade County is auto repair shops. In Miami-Dade County, they're required to carry $50,000 of garage liability insurance, and they're required to carry garage keepers coverage, though there's a specified amount of garage keepers to purchase. Now you go up a little bit further north to Broward County, and auto repair shops are required to carry the same $50,000 of garage liability coverage, but they're required specifically to carry $50,000 in garage keepers coverage also. Now, you go even further north, and some counties don't require any coverage at all for auto repair shops. So you need to check with your local municipality and your county as you're looking to do business in their jurisdiction to make sure that your insurance program is in compliance with what you need in case you do come across an inspector. Every so often we'll get a call from an insured who's confused because they're being required to buy coverage that's not necessarily required by law. There are coverage requirements coming from a contract. People get confused because they're asking, well, why do I need to buy this coverage? Well, contracts can pretty much ask for any type of insurance requirement as long as it's what the entity who created the contract wants. So they don't necessarily have to abide by the same rules or limits that the government's requiring. They can require more than that in order for them to provide that contract to your business. We cannot stress enough the importance of reviewing those contracts prior to signing them. Many things can be negotiated off a contract. You'd be surprised how much can be negotiated, especially in the insurance requirements portion of it. But once it's been signed, in our experience, it's very hard to negotiate those things off. So you need to know exactly what your costs are going to be from an insurance perspective prior to signing the document so that it doesn't affect the affordability, the profitability of that particular job or whatever work you're doing for that contract. Different types of contracts have different insurance requirements. One common type of contract that people don't even realize that they're signing are leases, whether for equipment, an automobile, or even a location. Almost all leases require some kind of insurance. Automobile insurance leases often require that you carry some type of third-party liability coverage and physical damage for the vehicle that you're leasing. When you're renting a premises or a space, the landlord's requirements can be all over the place. Almost all of landlords require that you have at least some type of liability coverage. The limits can be different from landlord to landlord. Some landlords also require that you buy property coverage. It could include the building, contents, business interruption coverage, what's called improvements and betterments, or the changes that you've made to the building or location. Some will also require that you have a coverage called equipment breakdown, which is for the air conditioning unit or refrigeration units or cooking equipment that may have already existed in the space. We've also seen landlords request automobile liability insurance or business auto or commercial auto coverage and workers' compensation coverage. Similar to what we were discussing before, you really need to verify prior to signing the lease what those insurance coverages are and what they're going to cost you. Because once you've signed the lease, we've found that it's very difficult to negotiate it on the back end. So if you're expecting your rent to be a certain amount, but you didn't buy the right insurance in order to satisfy the lease, well, you can basically look at the additional coverages you're going to be spending money on as additional rent. For financing or mortgage type contracts, usually the insurance requirements revolve around the collateral that's being held for that financing or mortgage. So as an example, if you're purchasing a building, you're taking a loan for that building, they'll want you to buy insurance, property insurance for the building in order to cover it in case of any damage or loss. If you have a floor plan or a line of credit, sometimes they'll require that you carry coverage for your contents because those are the collateral for the floor plan or the line of credit. And even further, for certain types of line of credits, what they're using as collateral is your future business income. So they'll make sure that you want business interruption and business income coverage so that those payments can continually be made. Sometimes for these types of financing contracts, they'll also require you to have liability insurance, but that's less often than just regular property insurance. An example might be if you were doing a building construction loan. Oftentimes the bank will want to have a liability policy, and they be named as additional insured. For construction contracts, there are always insurance requirements, but there's no standard as to what those insurance requirements might be. The differences may have to do with who the owner of the project is, who's financing the project, where the project's happening, the local jurisdictions, and all those things can affect what coverages will be required as part of the construction contract. Now, this is a place where we often, having clients call us in after the contract has been signed. I know the bidding process can be difficult, but at the end of the day, if you're not sure how much you're going to spend in order to work that job, you don't know how much you're going to keep at the end of it. So again, it's so important that you contact your independent insurance agent before signing the contract to make sure that all the indemnity agreements and the insurance requirements have been reviewed. That way, you can be aware of exactly what your costs are going to be going into the project, and it makes the profitability go up because you priced it right at the beginning. With a vendor's contract, or a situation where you're selling a product to somebody or you're performing a service for somebody and there's a contract involved, usually the insurance requirements have to do with offsetting the bodily injury and property damage that the product you're selling or service you're providing can cause to those parties. So the requirements will always be that you provide them, that you provide them some type of liability coverage that would protect them also if they were to be sued because of the product that you sold or the service that you provided for them. Insurance can be required for a lot of different reasons in the state of Florida. That's why it's so important that when you're doing your research or you're setting for your business plan, that you review all the legal and insurance requirements that you may have for that business or for that project. This will make sure that your business is starting off on the right foot or the project is starting out on the right foot, and that it will end in a way that equals profits for your business. Insurance surprises can cause a lot of issues, and most of it eats into your profit, either by having to buy insurance coverage you weren't sure you wanted, but now you're required to buy by contract, or by not having the right insurance in place and what those losses will mean to your business in the future. This has been a broad and general explanation of where insurance may be required in the state of Florida. Keep in mind that not all insurance is created equal. No matter what the TV or internet ads might say, you should spend some time with your independent insurance agent to review your insurance requirements and business needs to make sure that the coverages you want to have are the coverages you will have when there is a loss. If you don't have an independent insurance agent or would like a second opinion, feel free to call, chat, or email. We'd be glad to sit down and discuss your individual insurance needs. Thank you. Well, like the deathbed. She's laughing at me. Shake it off, do do do. Insurance. Ah!